All right, welcome to Drill Down Earnings. We have a quick look at the latest earnings from Hewlett Packard Enterprises. These are Q3 earnings for this company. This is the business story behind One Stock in a Move. I'm Chief Market Strategist Cory Johnson. Well, Hewlett Packard Enterprise earnings, really interesting, big company, selling important software and hardware products that are fueling all kinds of business and government and, lots of AI. So let's talk about that. So Wall Street likes a beat or a miss. And this was a beat and a raise in a full year guidance based on AI demand. Yet the stock was down in the quarter. So let's talk about why, or at least in after hours trading a little bit. So specific numbers, when we break these numbers down, $7.7 billion in revenues. It's up 10% year over year. GAAP OpEx reduction. So they're reducing prices by 7%, or non-GAAP 7%. But that's good. Cutting costs has been a problem for this company for a long time and growing revenues at the same time. Well, they're back to that and generated a lot of free cash flow, $669 million. So very positive for them in terms of that. But look, this revenue growth rebound back to 10%, really impressive for this company after taking a little bit of a swan dive in recent quarters. Now, EBIT margins as well, holding steady at 7%. So profitability hanging in there, that cost cutting is helping. But when you go a little bit deeper beyond these headline results, what you start to see from this business is a number of things, because we're in a number of businesses. So let's talk about them. So I don't want to throw away financial services. I normally do in companies like this because they're doing, $900 million in revenues and kind of holding flat as a percentage of profits or operating profits at about 9% in that nearly $1 billion business, managing that quite well. It's an impressive sign for this company. But let's break down their other businesses. All right, Intelligent Edge, big business. Software-defined networks, wired and wireless local area networks and campuses and stuff. It's a great business for these guys. 24% operating margins here at nearly $1 billion in revenues. And their hybrid cloud business. And if these segments sound a little bit different, they've changed their segment reporting in the last year, which the guy who works on his own models like forever. I hate this stuff, but that's what they did. And they wanted to describe their business more accurately. Fine, hybrid cloud, growing 6% operating margins there. And that business also doing about $1.3 billion in revenues, call it. But the thing we're really looking for is the largest of all their businesses at about $3 billion, and that's their server business. Why do we care about servers so much? Because it's not just servers, it's high performance computing, supercomputing, data analytics, transaction processing, and yes, AI. This is where the AI is. About 10% profitability in this business, but it's growing really nicely. When they reported these numbers, the stock was up 4%, pretty good because expectations were there. Dell set expectations pretty high in a similar business here. And yet for the last year, the stock is down 2%. But looking at this AI business, one of the questions people have is it really AI, or are you just selling servers and they're having a different purpose? Or are you selling AI servers and it's going to hurt the sale of the other servers that have been the biggest part of your business for years? And so specifically, the company broke out a bunch of numbers about quarterly AI system sales, saying that they were $1.3 billion in a quarter. Very strong. That's about a little more than a third of their overall server business. But when asked very specifically in the conference call about this, Antonio Neri, the CEO, who's got this wonderful Italian accent, he's Argentinian, he's Italian. If you get a transcription of the conference call, when he talks about the AI workloads, the transcription service seemed to call it warlords. I think you can hear him saying workloads, not warlords. But here's what he had to say about either warlords or workloads as it relates to AI.
The enterprise, while it's growing, has been very much focused on the AI applications. And for customers to move a traditional workload, call it legacy workload, and the like, to a accelerated compute, the question is why you will do that when A, you need to use that accelerated compute to either fine-tune the model or to do inferencing. And second, from a TCO perspective, there is no clear view that will be cost less. And so that's why, when I think about workloads and customer segments, we don't see signs of cannibalization from the AI deployments into the traditional workloads.
So traditional warlords or workloads are not being replaced by AI spending for HPE. kidding aside, is doing really well for this company. In fact, that's the number that's going to take us to our drill down bite, the one number that tells us a whole lot. I'll give you an earnings summary. I'm going to tell you a new number here that's pretty interesting about sort of the cumulative success this company's having in AI already, right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Hewlett Packard Enterprise just reporting Q3 numbers. Here's your essential summary, your drill down earnings takeaway. Company doing $7.7 billion in revenues. Nice growth on a year-over-year basis, 10% growth. Finally back to big growth, rebounding after some rough quarters there recently. But the thing that's driving that growth and led them to raise their guidance for the year is AI sales. And that brings us to the drill down bite, the one number that tells us a whole lot. $6.2 billion in cumulative AI sales in less than 2 years for Hewlett Packard Enterprise. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. And you can hear more. Check me out on X at Cory TV. Make sure you follow us on Instagram or TikTok at Drill Down Pod. You'll see all kinds of earnings summaries and a whole lot more. Leave us some comments there. You can't do it here. Leave some comments there and tell us what you think. Tell us what you'd like to see. I'm here to help.